to the Money RX for CRNAs podcast, where you go behind the scenes with host Brett Fellows, CFP, as he explores the unique opportunities and challenges facing certified registered nurse anesthetists along the path to financial independence. In each episode, Brett shares expert insights and actionable advice, equipping you with the tools you need to take control of your financial destiny and retire on your terms. And now, here's your host, Brett Fellows.
Welcome to the Money RX for CRNAs podcast. Thanks for joining us. I am your host, Brett Fellows, a certified financial planner with over 20 years of experience in guiding CRNAs through the complexities of financial planning, tax strategies, and investment management. For those of you who have tuned in before, welcome back. And for anyone who is listening for the first time, this podcast is dedicated to helping certified registered nurse anesthetists achieve financial independence and retire on their own terms. On today's Money RX for CRNAs episode, we're talking about a big one: buying a home. And as always, thanks for joining us. Our primary audience is CRNAs around the age of 50, often married with children, and typically about 10 years away from retirement. You worked hard, and now it's time to ensure that your money works hard for you. If you want to receive weekly updates with recaps of the show and resources that we mention on the show, as well as some exclusive content, sign up for our Friday Blitz email, and you can do that at our website, oakcapitaladvisor.com. And that way, once a week, you'll get an email with a recap of everything and some links to the stuff that we talk about. And we're also excited to announce that we have a new book coming out. Publishing should be finished by the end of this year, called, coincidentally enough, Money RX for CRNAs, Secrets and Strategies to Maximize Wealth and Retirement. If you would like a copy of the book, we would be honored to send you a free copy. All you have to do, we'll put a link in the show notes. From that link, simply fill in your information and we'll be sure to get you a copy once it's published. And with that out of the way, let's dive right into our topic for today. So buying a home is one of the most significant financial decisions you'll make. There are so many factors to consider, from cash flow to mortgage specifics, and so it's easy to get overwhelmed. But fear not, we've got a checklist of key issues to help guide you through the process. And be sure to check the show notes at the end of the show, where we'll give you a link to this checklist. So let's jump into it with cash flow issues first. When buying a home, one of the most important things to consider is, how much will it cost to own and maintain your new home? Now that includes your mortgage payment, property taxes, homeowners insurance, and maybe even private mortgage insurance, or PMI, if it's applicable. And don't forget of things like utilities, maintenance costs like a new roof down the line, and even commuting costs or childcare if needed. All of these things can add up, so it's crucial to factor them into your budget. Now, the next question to ask is whether you plan to make any changes or improvements to the home, like a renovation or an addition, because any upgrades or repairs will, of course, impact your financial situation. So you want to make sure you're prepared for those future expenses. Another critical issue is to consider how this purchase will impact your ability to save for other goals, especially retirement. It's really easy to get caught up in the excitement of buying a home, but you need to prioritize. So you don't want your home purchase to derail other long-term financial goals, again, like building up your retirement savings. So be realistic and ask yourself, will this purchase prevent you from saving the way you need to? And speaking of lifestyle, if you have a spouse or partner, will you be living on just one income? This is common when one parent stays home with the children, so it's of course crucial to adjust your budget accordingly. Because with one income, you'll need to make sure that the mortgage and household expenses still fit comfortably into your financial picture. A big mortgage might not make sense in that scenario. And here's a really interesting question that often gets overlooked. Are you planning to live in the home for 5 years or fewer? If so, it might be more practical to rent rather than buy. There are, of course, costs associated with buying and selling a home, like closing costs or realtor fees and more. So, a break even analysis can help determine if buying is the right choice. Again, especially if you're planning on moving within a few years. Now, let's move on to mortgage related issues, because this is where things get even more specific. First up, did you serve in the military? If so, you might be eligible for a VA home loan, which can offer lower interest rates and some other benefits. And if you're unsure about what mortgage rates you qualify for, it's a good idea to get help evaluating competitive interest rates. You, of course, want to shop around to get the best deal possible. Also, are you working right now? Lenders typically won't lend to you if your total monthly mortgage payment, meaning principal, interest, taxes, and insurance, exceeds 28% of your gross monthly income. And if you have other long-term debts like student loans or car payments, your total monthly debt payments, including the mortgage, shouldn't exceed about 36% of your gross income. Otherwise, you may find it harder to qualify for a loan. Another key question is, are you retired with no earned income? If so, lenders may look at your portfolio, your withdrawals, or your pension if you have one, to determine if you can qualify for a mortgage. These mortgage lenders are going to want to make sure you have a steady source of funds to make those monthly payments. And let's not forget about credit scores either. If you have a low credit score or poor credit history, lenders might charge you a higher interest rate or even deny the loan altogether. And that's why it's so important to review your credit report, correct any inaccuracies, and work on improving your score before applying for a mortgage. Paying off debt and keeping credit card balances low can, of course, help with that. And one more thing to think about when it comes to mortgages. If you're planning on making any large purchases or opening or closing credit cards before buying a home, be very cautious. Talk to your lender first. Major financial changes can impact your credit score or loan application process, and you don't want any surprises just before closing on your new home. There are also different types of mortgages to consider. You have fixed rate, you have adjustable rate, you have FHA loans, and even reverse mortgages if you're over the age 62. Each has pros and cons depending upon your situation. And so the key is to weigh the trade-offs carefully. For instance, FHA loans might offer you lower down payments, but they often come with primary mortgage insurance, or PMI, which adds to your monthly costs. And reverse mortgages can provide income for retirees, but they're not for everyone. So it's something you want to understand fully before, of course, jumping into anything. So now let's talk about down payment and closing related issues. So when you're buying a home, it's not just the purchase price that you need to think about, but also those closing costs that are involved. Now, these can include appraisals, loan origination fees, processing fees, and even attorney's fees. It all adds up. Many people need assistance determining how much of a down payment they should make. For example, putting less than 20% down on a conventional loan could mean you'll have to pay for private mortgage insurance or PMI. And don't forget to review your emergency fund. You want to ensure that after you put down that initial payment, you still have enough liquidity to handle any financial surprises that may come your way. And speaking of liquidity, some people might need help figuring out how to actually fund that down payment. And depending on your situation, you might be able to tap into a few different resources. So let's talk about those. For instance, if you have a Roth IRA, you can withdraw contributions at any time penalty free. You can also withdraw up to $10,000 of earnings tax free if you've had the Roth for at least 5 years and you're using the funds for a first time home purchase. If you have a traditional IRA, you can also withdraw $10,000 penalty free for a first time home purchase, although income taxes still apply. And don't forget about your 401k or 403b. Some plans have loan provisions that allow you to borrow against it, though this should be considered very carefully. Plus, there are down payment assistance programs out there, so it's worth exploring if you qualify for any of those. Now, let's shift gears to another important topic that you wouldn't think about: estate planning. If you're buying a home, one thing to consider is whether it should be owned by a trust. This can help avoid probate, which is especially important if you own property in a different state from where you live. Some states even allow for a transfer on death, or TOD, deed, which can be a simpler option than going through the probate process. Another critical question to ask is whether this purchase will require you to update your estate plan. Any big life change, like buying a home, often means it's time to review your will, beneficiaries, and any trusts that you may have set up. Okay, now let's move on to some tax planning issues. One major thing to think about is whether your property and state income taxes exceed $10,000. If so, under current law, you won't be able to deduct any amount over that limit. And similarly, if your mortgage debt exceeds $750,000, you won't be able to deduct the interest on the portion above that threshold. Now, this is especially important for people buying in high cost areas where homes can easily hit those numbers. And if you work from home or a 1099 CRNA, another tax related consideration is whether you'll use part of your home as your principal place of business. You could potentially qualify for the home office deduction, which can help offset some of your expenses. And lastly, if you're planning to make improvements to the property, it's very important to understand how that affects your tax situation too, because the cost of these improvements can be added to your cost basis, which could reduce your capital gains tax when you eventually sell your home. Now let's touch on a few other issues that buyers should consider. First, is this a second home or a rental property? If so, how you title the property can impact your liabilities, and in some cases, you might want to explore setting up an LLC to protect yourself. And a new mortgage might also change your life insurance needs. So you'll want to ensure that if something happens to you, your family isn't left with a mortgage that they can't afford. You'll also need to review your home and auto policy. Often, bundling these policies with one carrier can save you a lot of money. And don't forget umbrella insurance, especially if you already own another property. Umbrella policies can provide additional liability coverage beyond what your standard insurance policies offer. And depending on where you live, there could be state-specific issues to consider, because some states offer tax benefits for homeowners, while others may have regulations or requirements that you need to be aware of. And lastly, if this home purchase is happening because of an employment change, you may be eligible for relocation assistance from your employer. And so it's always worth checking to see if there are any benefits available to help you with your move. So that was a lot of ground to cover, I get it. Buying a home is a complex process, but thinking through these different factors, from down payments and mortgages to estate and tax planning, will help set you up for success. And as always, we recommend sitting down with your financial planner to make sure every part of the process aligns with your long-term financial goals. Thank you so very much for joining me today. Be sure to check out the show notes for a visual of all the information we covered. And if this episode resonated with you, please share it with a friend who may be looking to buy a home. Until next time, make it a great day.
This podcast is for informational and entertainment purposes only. It should not be relied upon as a basis for investment decisions. This podcast does not engage in rendering legal, financial, or other professional services.